Now, sticking with our Africa focus, surprises on the west of the continent. Ghana's September inflation came in at 21.5% year-on-year from 20.4% previously. This against Absa CIB's expectation of a decline to 19.3%. The Bank of Ghana, in the meantime, announced a 200 basis point cut in the nation's monetary policy rate to 27%, while the Absa CIB anticipated a cut of 100 basis points. Ridle Markus, SSA Macroeconomist at Absa CIB, joins us with his analysis on these data points. Thank you so much for your time, Ridle. Quite interesting because Ghana's consumer prices had been cooling down over the last few months. And then, of course, we did have the September figure backing that trend, surprising to the upside. What has jerked up the prices, particularly in September?
Hi, good afternoon. So I think you're talking about bucking the trend in September. I think that there was a bit of a bucking the trend in the August print.
Okay.
So in August, I think we were all caught by surprise when inflation fell to 20.4%. I think many of our analysts expected it to actually increase from August. Based on the month-on-month increases that we saw in CPI in the preceding 3 months before August. And those month-to-month increases suggest quite strong inflationary pressures of above 2%, 2.5%, driven mostly by food. And of course, we know that the currency has been under pressure for some time, having depreciated well over 20% in the first 8 months of the year. So then the August print came, and after increasing by over 2% in a month before August, CPI actually fell 0.7% during the in August. And that resulted in the lower print of 20.4%. And then came the September CPI print, which then showed a 2.8% increase in a month-to-month rate of CPI, with food increasing by, I think it was 4.2% month-to-month. So that was really a massive surprise, but also then a continuation of the inflationary pressures that we saw prior to the August meeting. Now, what was, of course, interesting in the in the September inflation print was that it was not just food that increased sharply. There were also components within the non-food, a basket that increased quite sharply, including furnishing, health, transport, etc. So we were really caught by surprise, and I think that explains why we thought that after the lower CPI in August, that maybe is the beginning of a new trend, and that September will continue the trend. But September actually just continued the trend before August, if you understand where I'm getting with this. So, a couple of strange readings coming from the stats office, particularly given that the MPC was quite upbeat about the inflation outlook at the MPC meeting, by not cutting by 200 basis points, but also arguing that inflationary pressures are fairly balanced. But the September print didn't show, that kind of narrative. I think the September print made me worried that food is really a huge concern, that the currency, which is in the meantime weakened further, now 24% down on a year since the beginning of the year against the US dollar. And then we know that global oil prices have also increased, having gone up from, below $72 just a week ago to $79 earlier today. So that could, along with a weaker currency, could see transport prices in Ghana increase further. So there is a bit of concern about the near-term outlook for Ghana's inflation.
It's quite interesting, Ridle, because as much as we saw, this hike in inflation for the last 2 months, and also we are still seeing a weakness there, it's quite interesting that the central bank, they decided to go even more aggressive than expected on the rate cuts. You talk about the oil price. Is this now linked to, because of course we know the issues that we have, for example, with food, strange weather patterns that we have have seen that, do affect supply. But at the same time, I mean, you talk about oil. So now looking at the external picture, is that linked to maybe just the risks, the upside risks that exist due to geopolitical tensions?
Absolutely. And I think, obviously, I don't think at this point in time, we know how the tensions in the Middle East is going to pan out. An escalation of those tensions could, of course, see oil prices rise significantly further, but a de-escalation of those tensions, we know that there's lots of efforts underway at this point in time to de-escalate those tensions. That could see oil prices recede again to maybe levels that, from a week ago. So, but for Ghana, even if oil prices subside a little bit from current levels, Ghana still faces quite a significant risk in the upcoming elections. Ghana received a very positive assessment from the IMF at the end of last week, saying that the fiscal reforms are on track and there's some progress made on that side. And I don't think that there was any concern around fiscal discipline, but we do know that I think investors are generally concerned around election time about Ghana's history of fiscal slippages. So, that could also be behind the weakness in the currency. And the currency has weakened further, as I mentioned earlier, and could potentially still weaken further into year end. So inflationary pressures are going to remain for Ghana, which is why we think that there's a good chance here that inflation can actually rise to close to 24% by the end of the year. Now, what does it mean? It potentially means that with one more meeting left in November, shortly before the elections, that Ghana may cut the policy rate, but not at the pace that we saw now at the September meeting when they cut by 200 basis points. So potentially 100 basis points likely. Now, if there's a further upside surprise in inflation in the October print, we might not see a cut at all.
Okay. All right. Well, thank you so much for your time and giving us insights on that inflation picture and also the MPC decisions that we have seen from the Central Bank of Ghana there. Ridle, much appreciated. That was Ridle Markus, SSA Macroeconomist at Absa CIB.